Hey, welcome back everybody. I'm Monty the Money Monkey, and today we are talking about something that confuses a lot of monkeys out there: credit cards. Now, before you run away screaming into the jungle, I promise you this is going to make total sense by the end. But first, give this video a like and remember to subscribe to our channel so you can know your bananas like I do. Now that we got that out of the way, let's get into this. So picture this. Monty wakes up one morning, the sun is shining, the trees are swaying, and all Monty wants is a big pile of bananas. Life is wonderful. But, Monty checks his leaf pouch and there's nothing in there. 0 leaves, completely empty. Now, normally, no leaves means no bananas. But what if there was a magical little card that said, "Hey Monty, go get your bananas today and sort out the leaves later"? That, my friends, is basically what a credit card does. It lets you buy something right now using money that isn't yours yet. You borrow it from the bank, you get your bananas, and then you pay it back later. Simple concept, but there's a lot going on underneath the surface. So how does it actually work? When Monty swipes his credit card at the banana market, the bank steps in and pays for those bananas on Monty's behalf. Monty now owes the bank that amount. And here's the key thing. Monty has roughly 30 days to pay it all back. Pay it back in full and on time? No problem at all. Everyone's happy. But if Monty doesn't pay it back, well, we'll get to the scary part in a moment. Before Monty can even get a credit card, he has to prove himself worthy. The bank isn't just handing these things out to random monkeys swinging through trees. Monty needs something called a credit score. Think of it as a trust rating. It tells banks how reliable you are when it comes to paying back money you owe. In the US, a score above 740 is considered good territory. Above 800, and you're basically a financial legend. Below 580 though, and banks are going to look at you like you just dropped a banana peel on their favorite suit. Not a good look. Now, even when Monty gets approved, there's a ceiling on how much he can borrow. That's called a credit limit. Starting out, most new cardholders might only get access to around $1,000. As trust builds over time, that limit can grow. The bank is basically watching Monty, noting whether he pays on time, how much he spends, and whether he stays responsible.
So, why would anyone bother with a credit card at all? Great question. First, sometimes expenses come up that Monty just wasn't prepared for. Maybe the banana tree fell over. Maybe there's a jungle emergency. Having a credit card means Monty can handle it now and pay it off in smaller pieces over time. Second, using a credit card responsibly actually builds that credit score we talked about. A strong credit score later helps Monty get approved for big things, like a car loan or a mortgage on a nice treetop property. Third, credit cards often have better fraud protection than carrying around a bunch of leaves. If someone steals Monty's card, it's the bank's money on the line, not Monty's personal savings, and banks move fast to deal with that. And fourth, the rewards. Banks want Monty using their cards, so they offer incentives. We're talking cashback, travel points, airline miles, hotel rewards, even sign-up bonuses if Monty spends a certain amount in the first few months. Free bananas, basically, just for spending money you were already going to spend anyway. But here comes the twist. Because nothing is ever completely free, is it? If Monty doesn't pay back what he owes by the due date, the bank starts charging interest. Interest is essentially the cost of borrowing money. Think of it as a percentage fee, added onto whatever balance Monty still owes. So, if Monty borrowed $100 and his interest rate is 10%, he now owes $110. Okay, that sounds manageable. But here's where it gets really nasty. Enter compound interest. This is where debt can spiral out of control if you're not careful. Instead of calculating interest just on the original amount borrowed, compound interest charges a percentage on whatever the current total balance is, including all the interest that's already been added. So that original $100 quietly grows bigger and bigger every single month. Monty ignores it. What starts as a small snowball becomes an avalanche rolling down the mountain. And the painful part is that even if Monty pays the minimum amount required each month to avoid late fees, Most of that payment goes toward covering the interest charges rather than reducing the actual original debt. Monty could be paying for years and barely denting what he originally borrowed. That is the credit card debt trap, and it catches so many people off guard. There are also various fees attached to credit cards beyond just interest. Annual fees for simply holding the card, late payment fees if the bill slips your mind, foreign transaction fees when you buy something from another country, cash advance fees if you use your credit card at an ATM. The list can get pretty wild, honestly. So what's the move here? A few things to keep in mind. Always check the APR, which stands for annual percentage rate, before signing up for any card. That number tells you the yearly cost of carrying a balance. Pick a card whose rewards match how you actually spend money. If Monty is always buying groceries and petrol, get a card that rewards those purchases. Only spend what you can genuinely afford to pay off within the month. A good rule of thumb is keeping your spending below 30% of your total credit limit to protect your credit score. Set automatic reminders or auto-pay so the due date never sneaks up on you. And whenever humanly possible, pay the full balance every single month. Credit cards are genuinely powerful financial tools when used correctly. They build credit history, offer protection, and even earn rewards. But treated carelessly, they become a very expensive trap that is genuinely hard to escape. Monty wants you leaving this video feeling informed and confident, not overwhelmed. If this helped you understand credit cards a little better, hit that like button, drop a comment below, and subscribe so Monty can keep teaching the jungle one financial lesson at a time. Apes together strong, and financially informed apes even stronger. See you next time.